So, Rajeev, a weak dollar, a low rate environment, and several vaccine candidates on the horizon all seem to be boding well for emerging market assets. What is your outlook for emerging markets, and which asset classes should outperform?
We've already had a fantastic rally which has started in emerging market assets. And that has been on the back of this cyclical recovery that we've been seeing materialize over the last many months. In fact, now maybe 6 months, and that has really powered asset classes worldwide and had a significant impact on emerging markets. As you mentioned, the dollar is an important part of that story as well. In the second half of 2020, we saw quite a significant weakening of the dollar against most currencies, but even more so against emerging market currencies. And emerging market currencies in that environment benefited from many factors, which I think will continue into 2021. So I retain my optimistic outlook on the asset class in general. One, that weaker dollar story will continue. The reasons that powered it lower are that the Fed cut rates and increasing, or it's been increasing its bond buybacks and the size of its balance sheet. The US has embarked on quite a substantial fiscal boost, and now at the end of 2020 announced a further big one, which a lot of the market had been expecting for a while. So it's not completely news, but there was some uncertainty right to the very end, and that's quite clear. So that contributes as well to a weaker dollar. The third point is really that investors globally are keen to invest. There's a risk-on feeling. There's a feeling that we're getting to the end of the pandemic, even though cases are rising and unfortunately death rates as well. There is really hope with the vaccine being rolled out. And we're in the process of vaccination, so that's very positive. And that's helpful for global growth. And what's good for global growth is definitely good for emerging markets, assets generally. So now if we look into the different subcomponents as you asked me, the one which performed extremely well has been emerging market credit and emerging market equities. The one which performed a little less well, even though it did well, as I mentioned, has been emerging market local currency, especially in some areas which are more sensitive to the cycle, like commodity producing, exporting countries, Latin America. So I think that's an area where we'll see some catch up. Commodities have been on a tear already over the last couple of months. And I think that they will continue to go up when we have this big cyclical recovery. So that's probably an area, the local bonds, equities, which are more focused on the commodities and on the cyclical aspects of the recovery.